through your view on currencies?
Yeah, I mean, basically currencies are back to more neutral levels. So the extreme valuations that we saw 18 months ago have now been taken out by the market. So in other words, the Aussie dollar's fallen, what, 30–40%. The euro's quite cheap, pound's quite cheap. The yen had fallen a long way. So we got to a point where the US dollar had probably gone up as much as it needed to go up, particularly in an environment where we still expect the US economy to grow, but it's going to be just a couple of percent. So the equilibrium is back in line, and you can see that it's just come back from travelling in the US, and all of a sudden restaurants are starting to look more expensive versus Australia. You actually notice it because when you actually get the final bill, you've got to basically add about 70% in terms of taxes, tips, currency adjustment. So we think most of the decline in the Australian dollar is over. If it had have kept in line with commodity prices, it probably had another 10 or 15% to go. But we've still got higher interest rates than everyone else, and in a world that's really short of coupon or interest rate, it's still attracting flows. And the US economy it's not going to be really strong. It's going to be okay, and therefore it won't suck in capital, for example, like it did back in the TMT boom. So it wouldn't surprise me if we're kind of going to jump or go kind of sideways from here for a while. And so you have your ups and you have your downs, but that's basically why we brought all our currency back to sort of more neutral positions. I don't think so, because you can see with the economy here, the reality is we're doing fine. So it's not as though we need the currency down any further to help the economy. I think they just do their modelling, and as I've mentioned, if you look at it compared to commodity prices and how low they got, you would have expected it to be in the mid-60s. But we're in an unusual world, and there's a lot of monetary stimulus. So I think there's always a chance we've still got one last leg, because I think what we're seeing now is a rally from very oversold commodity short positions. But the environment in the next 3 to 5 years is still going to be very tough for commodities. So what you might see is the Aussie dollar settle down, have a bit of a bounce, and then just slowly kind of degrade, particularly if the US continues to grow. But bottom line, around 70 cents, it's fair value, it's fine. So it might even stay, just plus or minus 70 cents. It's hard to tell, but it's certainly not the extreme it was when it was above parity. So that's why we've come back to neutral.